What does it look like when two leaders, each defined by experience, innovation, and performance, unite to elevate Canadian real estate lending? With nearly a decade of serving the needs of investors, borrowers, and mortgage brokers in the alternative market, Neighbourhood Holdings has now taken a major step forward by acquiring Fisgard Asset Management, forming one of the largest alternative mortgage lenders in Canada. Together, they manage nearly $800 million in mortgages across more than 2,000 borrowers and over 3,000 investors nationwide. Through the Neighbourhood banner, the team works directly with mortgage brokers across Canada, providing short-term mortgages for quality borrowers who may not fit traditional bank criteria. Every loan is backed by real assets, ensuring a measured, conservative approach, seeking to provide investors with stable income while preserving invested capital. Whether you're a mortgage broker seeking flexible financing options or an advisor looking for regular income solutions, Neighbourhood's expanded reach brings track record, transparency, and opportunity, now even stronger with Fisgard's 30-year legacy. To learn more about the Neighbourhood, visit neighborhood.com to view the offering memorandum or speak to your financial advisor today. This is not advice, and consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to Loonie Hour, episode 224. As always, joined by the 8 amigos. Keith Dicker over in Halifax. Rich Diaz over in, where the hell are you? Davos?
I'm in Davos. I'm in Davos, Switzerland. I'm in the Alps. I've come to keep an eye on Krista Freeland and the rest of her cronies. No, I'm kidding. I'm in Solden, which is in Austria. So every year, my buddies and I, we take a ski vacation. It's one of my favorite things to do, really. We look forward to it. We basically plan the next year's vacation midway through this year's vacation. So I think next year we're going to probably go to Chamonix. But it's just been perfect. Blue skies every day. I've had a couple of boozy afternoons. The conditions have been fantastic. And yeah, it's just honestly, it's just really grateful to be out on the mountain. So that's it.
Looks like you're in a hostage room.
That's me.
I think it looks like a sauna.
It
looks like a Finnish sauna.
Well, I actually was gonna do the pod from the sauna, but this is a Loonie Hour first. We're doing a pods from the bed, from my bed. So we're gonna turn Loonie Hour into OnlyFans. No, I'm joking. But yeah, no. So it's the only place I could do it from our hotel. So there you go.
Oh man, can you imagine, Steve? We have a sweaty Rich Diaz doing the episode from the sauna
it's
next
better
time.
than swim up bar. That was out of control.
Swim Up Bar is an all-time legendary pod. But yeah, we've had a busy week. Obviously, trying to keep up with the geopolitics du jour is been a challenge. There's lots going on. So we had a huge trade announced from PM Mark Carney. I think it was early this week.
Yep.
And we obviously they're all over in Davos at the World Economic Forum, the WEF. There's obviously lots of conspiracy theories about that, but we'll keep that aside. And I was going to kind of dig through all of that. We got Canada's inflation numbers coming out with the implications for the BOC. I've got some housing figures I want to touch on as well. But I think first and foremost, Keith, is touching on the trade announcement with China. So, well, Rich, but you might have more of the details there. You want to jump in?
No, I'm on vacation. It's Keith. Keith.
I think. Well, first of all, if something is proven to be true, it's no longer a conspiracy theory. So let's make sure we put that there in the box. What are the conspiracy theories? I don't know which ones you're referring to now.
Uh-oh.
Oh boy, here we go.
Okay.
Okay,
here we go. Let's stick with. I mean, this is a theme that we've been talking about for a few episodes now with IceCap and our strategies. It's a bit of a longer term theme in that the world has changed from being a globalist agenda focused economy to one that's now more of a domestic focus that's driven by the Americans. We're calling America first. And we could see the lines, how this has been developing. And now suddenly out of the blue, the Canadian Prime Minister actually physically calls it that. He does refer to the New World Order. He did that when he was in Beijing. So, it was an interesting week because you had China, the trade deal taking place there. And of course, now, they're all getting together in Davos. So, but with the Chinese trade deal, I mean, what really jumps out, of course, from the bigger picture, Canada has already established that we're going to expand our trading partners, because we don't like the Americans, for specific reasons. So we're going to go to China and we're going to strike a deal. So I think the deal they specifically struck focused on two markets. One, we're going to get to sell canola at a better price. I think that's what the
Yeah, you want me to walk you
deal
through
was.
it, Keith?
As well, but then in exchange for that, we had to take, the Chinese electric cars coming in, which is quite ironic because for the longest time, Canada had a 100% tariff against Chinese cars.
Yep.
And of course, Canada doesn't like tariffs if somebody else is charging them, but that doesn't matter in this case. But it's a bit odd. So the Saskatchewan Premier, Mose, he was over there with them as well. And this trade deal, it was celebrated in a lot of circles. And then some other bigger circles with a bigger focus, a bigger picture. That's where we would fall. We're sort of looking at this with what would you say, Rich? Huh? Is that what is that where,
Yeah.
huh? Is that where you're taking us right now?
Let me
what
give
are the
let me
specifics, Steve?
Yeah, let me give a bit of background context here before Rich chimes in. So, I think it wasn't 2024 we followed the Americans, Keith, where we brought in 100% tariff on Chinese EVs,
Yep.
basically aligning with our American neighbors, of course, because that was their policy. There's been concerns, of course, around the security apparatus of the Chinese EVs. But basically, Canada will allow 49,000 Chinese-made EVs annually into its market. And lowering the tariff rate, obviously not from 100%. They've lowered it down to 6.1%. And then basically in exchange, China lowered canola duties from 84% to a combined rate of approximately 15%. This include tariffs on canola meal, lobsters, crabs, peas, and related products. So basically, it was almost effectively an exchange. Now, if you're Scott Moe in Saskatchewan, obviously you're happy. If you're Doug Ford in Ontario, that is dealing with the auto sector, he was livid. So we'll kind of get into that. But Rich, I don't know if you want to chime in here.
Yeah, I mean, it's also, let's keep in mind that China has been unfairly subsidizing that industry for a long time. They're dumping their cars onto the global market. Those cars are manufactured with coal. It's unclear about their labor practices over there. They are widely liked, these BYD cars. People really do like these. The technology is people enjoy the cars. They're relatively well liked. There's definitely questions about there's security concerns with them. I think the Israeli government
military.
Israeli military either banned them or is thinking about banning them, or so I think it's also performative. I think that's like, to me, it was performative, and in my view, we're going to get to that maybe a little bit later, but it was performative in the sense that we are basically selling them raw materials or raw goods in the form of canola meal, peas, lobsters, crabs, or whatever, and they're shipping us a value add good. And so I'm not sure if that's just on the forget all the politics, forget security concerns, forget China versus America. Just on the face of it, it just doesn't strike me as a good deal. But anyways, that was for me, just purely as an economic perspective.
Oh yeah, I mean, I don't know. It was always, because we joked about it. We had so anyone that's interested in sort of the car industry's perspective, we had Brian Kingston on I don't know what 7-8 episodes ago maybe, for his perspective on everything and the implications of Chinese EVs. So you can certainly go back and rewatch that episode. But remember when Canada, I think they had the net zero car targets in Canada, but like 2030, like I can't remember, X percentage had to be sold in Canada. It was never going to be. Yeah, it was like never going to be achieved. And we always argued that, well, hold on a minute. If you really cared about like hitting these targets, and if you really cared about like climate change, then you would just say, bring in all the Chinese EVs imaginable, right? Because then you'd hit it right away. Of course, they didn't do that. They brought in 100% tariff. I think at the time, Krista Freeland was still running the show there. on the finance side. And so, yeah, now to sort of see them sort of basically unalign with the United States, I think it's just really, it's sort of, it's almost like a signpost, right? I mean, that's sort of the big picture is moving away from your neighbor to the south and sort of their security concerns and saying, okay, like we're going to seek out additional trade partners now. And in order to do that, we're going to allow some of these Chinese EVs into the country. So it's a dramatic shift in sort of narrative and policy.
Yeah, I get it.
I mean, so you have the economic trade component with it. And I just want the audience to appreciate, though, that there literally is a much bigger, Game of Thrones thing happening here. And, we've said it before, but with the American National Security Strategy and their Office of Strategic Capital, they're clearly said, hey, the Americans, we want to really control the Western Hemisphere. And that's why Venezuela came up as, there a couple of weeks ago. But then for the Canadians to do this, it's actually literally telling the Americans, we want to side a bit more with China. And people say, well, that's not true. We want to, diversify our trade base, everything. But Sam Cooper came out with some really good articles and research on this. But in 2019, CSIS, the Canadian Security Intelligence Service, that's what it is, the Canadian equivalent of the CIA, they basically came out and with an assessment that determined, these are just my words, so go and read it yourself. But the Chinese Communist Party and China in general, they've infiltrated, the Canadian political system. They affected the election in 2019. This was brought up. Nothing has ever happened with it. And now here we are now 5 or 6 years later. And once again, it appears that the Chinese Communist Party, they're using a trade deal to try to, again, get a bit of a stronger hold onto Canada yet again, at the very moment in time when you have this, increased tensions with the Americans. So, I mean, if this happened 10, 15 years ago, it would have been, hey, that's awesome. Hey, we have a new trade deal. Maybe we'll create some jobs and stuff like that. But the timing of it, it seems to be more of a political or geopolitical message instead of an economic one. Because if Ottawa really wanted to prove our economy, just negotiate something with the Americans that are right there. What's our percentage of trade with the Americans? Is it 80%?
77, 75 of goods and then 50 plus of services.
Yeah, I mean, the opportunity is already there to make improvements on it. So, so you have that perspective happening as well.
Hold on, to interject, because Rich, if you have, say, 77% of your exports going to the United States, I mean, I'm assuming it's logical or reasonable to suggest that we should diversify that. Maybe it shouldn't be 77, maybe it should be 65 or 63 or 62. I think we can all agree that. I mean, I think that's one of the reasons why, we're certainly proponents of, the Northwest pipeline, basically selling our oil to China.
Well, no, it would be sold on the global market, and China would have to bid, just bid for the oil, just like everybody else.
Right. Okay.
I mean,
I'm assuming you're of the view that you need to bring that number down.
Yeah. Listen, I think two things can be true at the same time. One is the U.S. is always going to be our most important trading partner, and to spit in their face at such a critical juncture from a geopolitical standpoint is, to me, crazy. And then at the same time, we really should be working to open our goods and services to the global market. In order to do that, you need to be competitive and productive, and you need to facilitate people investing here. So there are loads of things that we could have been doing over the last, let's say, 9-10 months. For example, approving pipelines, approving mines, approving refineries to sell products to people outside of the United States without antagonizing our most important strategic military and economic partner. And so that's why, to me, when Keith says I don't think that move was in the best interest of Canadians, I share that view, because ultimately I know many Canadians wish that they could literally move Canada and maybe go east and closer to China, or physically move it to where I am in the Alps. But that's never going to happen. We are where we are, and the U.S. is the U.S., and ultimately the deal needs to be struck. And so, to me, this puts in jeopardy a much, much bigger issue, which we're going to talk about maybe the next couple months, which is CUSMA, right? The NAFTA, the new NAFTA, or whatever it is. And so, it's you're what is it? You cutting off your nose to spite your face? Like, I'm just saying, to me, that's my perspective.
I guess, I mean, yeah, Rich, I don't disagree with you. I think the counter argument, of course, is, hey, they brought this on us. We didn't bring that on them. They're not negotiating in fairness. It's can we even trust their word? They seem to be sort of reneging on a lot of different things. That's obviously, again, the counter argument, which I'm not disagreeing with either. So I think it's tough. I don't know. I mean,
that's fair. I think you're right. You're fair.
Well, I think you're a bit both right. I agree with Rich a bit more with this. First of all, I don't think anyone in the public really understands what's the conversation that are really taking place.
I agree.
So with the Chinese deal and the WEF and the World Economic Forum in Davos and all that stuff, people read a headline from the media, and my view on the media, they're telling you what they want you to believe. And people just go with the headline, and then, that's it. You're automatic. You see the memes, the big army of people, they all look the same, and the big thought bubble above their head.
Yeah.
And then you have different platforms like us. We try to go a little bit deeper than that. And I think we do have success with that sometimes. We're wrong other times. But then there's a lot more taking place underneath the surface, and we don't know what that is. But back to just from economic perspective, you're trying to target your trade to be a certain percentage versus another percentage where it used to be. Like, it shouldn't work like that. Instead, so you look at the Americans, what is their budget now for defense? I think it's going to be $1 trillion, I think. And they're going to increase it by 50% next year and again the year after. So the amount of money that the Americans are going to be spending and investing in the commodity world, and rare earths, and technology, and infrastructure, we have all that. I don't know why on earth you wouldn't just say, you know what, we can do a lot of great business here. Let's get this sort of out. And then you can literally blast off with this. The jobs that can be created. And we got to talk about the inflation story coming up as well. But this whole domestic focused agenda, the American first policy, inflation is going to go through the roof. It's going up because commodity prices are going to go up. So here's the opportunity for Canada. If you really care about lower income households and so forth, strike these deals with the Americans, and it's going to work. Not try to antagonize them and do a deal with the Chinese Communist Party over there. Again, it's just,
I hear you. I mean,
it doesn't make sense. That's all.
I'm assuming they've got to be trying to do a deal here, though. Like,
but
I'm trying to sort of play devil's advocate.
Angle.
You know what I mean?
So there's a different angle. Sorry, there's a different angle. Like, to me, it was you were thumbing your nose in their face, like you're trying to embarrass them, in my view, because you could have done the deal. We could sell tomorrow if we built a pipeline, if we approved a pipeline, that share of energy going to America would shrink, and whose would be one of the biggest buyers of crude oil from Canada? It would probably be the Chinese. And so or tomorrow, if we approve a mine for this or that or natural gas or whatever, you can improve. You can win on the score that you're talking about, which is improving the access other countries have to our raw materials. But to go there and basically said, to me, it was sycophantic. Like, he was kissing up to Xi Jinping, who, let's remind everybody, he's a communist dictator of a country with a really, really poor human rights record, who spent 2 days blockading Taiwan, which is a democratic country of 60 million people that does not want to be part of the Chinese sphere. This is the same country.
And they interfered in our 2019 election as well. Like, there's lots of
Like,
I mean, we haven't even really touched on obviously the fentanyl.
I'm just saying
stuff.
that the Chinese are not some like, Winnie the Pooh type character where they're soft and cuddly and don't have hard edges. They are an empire, just like America is an empire.
Well,
And
Rich,
Canada,
to that point, Mark Carney also pre-election said China was the largest national security threat. Those are his words.
yeah, those are his words, right? So like, to me, it's like, who do you have shared values with? Like, Donald Trump will not be the prime president of the United States forever. Like, we're still going to have a 4,000-kilometer border. Xi Jinping could probably be the prime minister of China for the next 20 years. They're never going to have an election in China. They don't have freedom of speech. They don't have freedom of religion. They don't have freedom of association. Like, who do we want to associate with? And the fact that some guy was mean to us or mean to the previous prime minister and quote unquote threatened the sovereignty of Canada, and as a function of that, we're now getting in bed with somebody who's actively trying to destroy our democracy. Sorry to say, it doesn't make sense. I'm sorry, something's off.
So let's move over a little bit then, because because you could look at this and say, okay, that's a one-off event, the
Right.
trade deal.
Yeah, you're right.
However, that decision, it gets confirmed with the Carney speech in Davos, where he really came out, swinging. And, a lot of people, they loved the speech. Other people said, well, it's pretty thin and hollow, actually. But again, he had an opportunity not to come out that aggressively in the language that he was using with the speech. So again, it's all very interesting. And people expecting the world to go back to the way it used to be, it ain't going to happen. It ain't going to happen. And, my view, the reason we're here now in the first place is because we literally have a debt bubble all over the world.
Yeah.
And when you have debt bubbles happening, other stuff happens. And mainly you have to find an external enemy, someone outside of your country, outside of your economy to blame for things. It's the magician's trick, try to get a distraction,
sleight of hand,
something like that. Yes. But, all this is happening all over the world, of course. So,
just one more thing. Just one more thing. Like, the Bank of Canada and we have identified the problems that Canada has, which is low productivity, high regulations, taxes, and a lack of investment. And to me, that should be the lens through which we assess. If we're going to be dispassionate arbiters of the economic policy and markets, etc., that is the lens we should be assessing Carney's speech in Davos, the move to China. Does it help productivity? Does it encourage people, domestic and foreign, to invest in Canada? Does it liberate our businesses from overburdensome regulation? Does it make things cheaper and more affordable for regular people? And on that score, I don't think it advanced the ball in the right direction.
Yeah, I mean, obviously, we'll see how this all sort of shapes out. I think just to clarify on that EV thing, I thought it was an important sort of like distinction because, I spent a lot of time sort of digging through it and research and reading various commentary on it. But so they're allowing 49,000 EVs to come in, and so this is again manufactured in China. So apparently, the biggest beneficiary is actually going to be, ironically, is going to be Tesla. And in Elon Musk, who's probably Canada's number 2 most hated person here. So basically, how I understand it is, so in 2023, when we were still sort of allowing, I guess, sort of, we didn't have those restrictions on these Chinese EVs. I think Tesla in 2023 imported about 40,000 vehicles, were manufactured at their Shanghai location, and then obviously sold here in Canada. So my understanding of that 49,000 vehicles is Tesla has this major sort of runway already because they're so well established in Canada that they're going to actually eat up a lot of that 49,000 quota. Because if you think about it, like, if Tesla's got this huge runway in Canada and a company like BYD wants to come into Canada, I mean, it's going to be pretty hard for them to get a foothold here if they can only sell 10,000, 12,000, 15,000 vehicles, right? I mean, there's not enough scale there for them to meaningfully impact our market and make it worth their while. So based on kind of what I've read is ironically, it's going to be Tesla that sort of benefits the most from this change in the tariff.
So are you saying of those 49,000 EVs coming in, a lot of those are actually going to be Teslas and not the Chinese branded car?
Correct. Yeah.
Yeah, my mind just went a bit.
Yeah, it's interesting, right?
Yeah.
Sorry, how does that help our auto sector? Anyway,
Well, I mean, I don't think it does. So apparently, again, I'm just reading through the tea leaves and doing as much research as I can. My understanding is that the longer term hopes is they have companies like, say, BYD that will come in and bring capital and basically set up battery plants domestically here in Canada and sort of do like these joint partnerships. That's sort of like the longer term goal, I suppose, as you ramp up the number of sort of quote unquote Chinese EVs that can be sold in Canada. But obviously, if you're a company now like Stellantis or whatever, I mean, yeah, I mean, this is obviously horrible news. I mean, there was some good stats here on it. And so Rich, someone also mentioned, oh, it's 49,000 vehicles. It's only 2.5% of the number of new cars sold in Canada. But if you actually look at the number of EVs that are sold in Canada, it's actually that 49,000 quote is around 25% of EVs.
Yeah, it's a big number.
So it's a big number.
So it's also interesting because I think the Americans have already stated, if you have those, is it BYD? Is that what you call them?
BYD.
Well, there's a bunch of car companies.
Okay.
But
If you have the
BYD is like
Chinese, if you have the Chinese electric cars coming in, we are not going to permit them south of the border.
How are they going to do that though? That seems like a
turn around, get on the ground.
Well, when you're at the border, let me see your papers. But it has to do with the spy technology, of course. That's what they believe is happening there. So for Canada, do you want the Chinese spy cars, or do we want the American spy cars? You're going to get them coming in. So I mean, Steve drives one, of course. But this goes back to
my Tesla from 2023. Ironically, if you look at it in the VIN there, I think it was the last year where it was manufactured in Shanghai. The new ones from 24 and 25 are all American.
Texas, yeah.
But
that's my point. There's spying is going to take place, and if you think that the spy technology does not exist in the cars and all these other electronic platforms or stuff like that, I think you're a little naive because it's absolutely happening. So, which spy machine do you want to cozy up to?
I mean,
you got to pick one. You can't say, well, we'll create our own. We'll create our own with the Europeans. I mean, do you really think the Chinese are going to roll in and protect us if something goes down with the Americans? No, that's not happening. So, and again, so I think I just crossed, Steve's conspiracy line. I think for the World Economic Forum.
Well, but however, Keith, on the local domestic manufacturers, so manufacturers such as GM, Hyundai, Kia are rolling out new entry levels, but prices remain steep. So GM showcased for the first time in Canada its 2027 Chevrolet Bolt in Montreal with a starting price of 40,000 Canadian dollars, a level that, of course, leaves room for Chinese models to undercut it by roughly $6,000 to $7,000. So there's just no way that these domestic manufacturers can really compete.
Well, do they need
40,000 for a Chevy?
I know people are going to say, well, their jobs and everything, but it goes back to the laws of comparative advantage. Like maybe we're not meant to compete in the auto sector, manufacturing world. You know what we can compete with really well?
I know.
Yes. The sweaty guy in the sauna. What's the answer, Rich?
Refined petroleum products would be a starting point.
Yeah, there's lots of things to look at. Anyway, let's want to move into the inflation data next, which it does tie in with all this.
Well, yeah, I mean,
Steve doesn't want to. Steve will not let go of his Tesla made in China.
we can certainly come back. I mean, I just think this whole conversation, I think that it's tough, right? I mean, it's tough because I think people, we do our best to look at this like level-headedly. I think we certainly have, our own sort of political views as does anyone else. I think we're doing our best to look at it through an economic lens and through a national security lens and sort of looking at the bigger picture. I think the challenge in Canada is that Trump is quite literally the most hated person in the country. And I think that it really spews out into the media. So it's hard sometimes to have these rational conversations. We see it in the comment section, the emails that come through, thinking that we're aligning with the Americans and we're not Canadian and elbows up and all that other stuff. But just reading a lot of the narratives I find is really interesting. I mean, obviously there's always, media is such a powerful propaganda tool, but you look at there's a poll out from Polling Canada this week where it said, "Are you concerned that the United States might militarily invade Canada in 2026?" And so 46% said yes, concerned. 21% somewhat concerned, not concerned, 33%. So you basically have, call it 50% of Canadians that are genuinely of the view that any day the US could invade Canada. And we had media reports out this week in addition to that, which I think is kind of stoking these fears and blocking any sort of objectivity to any sort of real analysis, is that the Canadian Army is currently running stress test scenarios of how long we would last basically if the United States invaded. And I think
it goes. Again, the whole.
But the media is leaking out these stories and these narratives.
It's to put fear. This is to terrify Canadians and put I don't know. Sorry, Keith, go ahead.
Think about that meme I mentioned. You got the army of people. They're just. I don't mean a military army. The big blob of people there. They all look the same, and the media is telling them you need to fear an American invasion of Canada. And right in their minds, they say, "Oh, we fear an American invasion." Oh, by the way, we want you to do a survey next. Do you fear an American invasion? of course we do. That's what we've been told to believe. It's I chat with a lot of European-based traders and managers quite a bit, and about 5 or 6 of them sent me texts and emails over the last week. They're saying about China, to Canada and China, and then the Carney speech, and all of them said, "What the heck is Canada doing?" It's just beyond these guys which direction Canada is leaning. And these are un-Americans, they're not Canadians, and these are money guys. And if you chat with true money guys, they don't care. They just want to see what's the logical decision, what's going on, but they are just. The mind is blown by which direction Canada can go and what we believe. And I have no response for them. I say, well, they all do this and that. But it's really weird, guys, with that kind of survey.
Well, Keith, to your point, right? If you're allocating money, like real money, you effectively have to get to the truth and money and manage money and invest money objectively. Right, so you have to sort of keep your biases and your views out of it, and to say what does this actually mean, and how do I earn the highest return from this news flow?
As an economist,
it's really interesting. But as an international investor now, if you look at this, you're saying, "Do I want to invest in Canada?" They're completely antagonizing the Americans who already said we're going to spend gobs of money in the natural resource space, and Canada has stated, we want to partner with your enemy. No, they're not going to invest in Canada. They'll invest in the US instead. Again, it's pretty easy to see why people are feeling this way in the money world. But again, you get the big group of people with the meme, they're believing what they. And people won't like what we're saying, of course. They're not going to like it.
They're not going to like it. But
here we
are. We had to say it. I don't know. We're not going to bullshit you. Of course. Yeah. Back to your bias point. Of course, we're biased. I'm not. But we try to play it straight, obviously. But I just think, to me, if to me, this is. I just think this is a total distraction. Canada is facing a productivity emergency. Unemployment rates are rising. We don't have investment in our country. And instead of focusing on housing is still unaffordable, you talk about crime, all these different problems. And instead of having laser focused on our own problems, I agree with you, Keith. The media is just drumming up this war drum that the U.S. is going to invade us. The truth is, it would take them 10 minutes. Okay, I can help they have 10 aircraft carriers, 80 Ohio class submarines. They have a nuclear arsenal. It's the second largest in the world. We're already part of NORAD and NATO. They have bases in the Arctic. That's so, let's be real about it. Sorry.
John Candy can come back and defeat the Americans if it happens. Move us along, Steve. Move us along.
Let's move along.
All right, moving along. Hopefully, can't wait to read the comments this week and all the angry emails that come through. But yeah, Rich, we had this is coming off of Keith's earlier point around inflation.
Oh yeah.
So we had Canada's CPI inflation came out this week. I think it was it 2.2% year over year?
2.4.
2.4. So I think it was like slightly higher than expected. I think some of that was the GST rebate from last year coming off. But Rich, I think what I found interesting is just looking at some of RBC's notes here. There was further easing in the BOC's preferred measures of core inflation. Pretty much most of them hovering around 2%. I don't know what your thoughts were, your takeaway there, but
well, I just because the news cycle is like crazy and we always talk about different subjects. We forget about what happened 6 months ago, 8 months ago, 9 months. And I actually forgot that this time last year, it would have been December, that Chrystia Freeland cut the GST and HST to combat vibe sessions. Remember we talked about that? And she was obviously universally panned for basically gaslighting Canadians into thinking the economy was just fine. We just don't quite understand the data. And so, but what's really amazing is because the reason, and I forgot about it. And so when I was doing my video for this week, I was reading the CPI release and it says the year-over-year acceleration in all items CPI was driven by the temporary goods and services tax break. But what's amazing is that what that basically tells you is that inflation, easy come, easy go. That tax cut was, remember, it was fine. It was deficit financed. And remember that it was a regressive tax, right? Because you're taxing on goods and services that are consumed. For example, at restaurants. So who eats at restaurants? Rich people more than poor people. So it was a deficit finance transfer of wealth from poor people basically to rich people. And the irony now is that as it unwinds, it's really impacting food, especially food in general, but food and alcohol beverages.
Is that why that food inflation is so high?
Yeah, no, it was high already, and now it's jumped. So you can see food purchase from stores is 5.0. Food purchase from restaurants, 8.5. You're getting fresh fruits and vegetables rising. Meat inflation is 8.5. We all know if you're lower on the socioeconomic ladder, you obviously spend more of your budget on food. So that's really, really hurting people. That's why the cost of living crisis is going to, in my view, going to be exacerbated. And so, this is something that to me, this is really what Canadians should be focused on. As the Deputy Bank of Canada governor said, affordability is a productivity problem, right? And we're seeing it really come through. And just one more quick thing. If you look at CPI X energy, your core number is back to 3.1%. So you're right, Steve. The three preferred measures of core, two of them have fallen, the weighted mean and the trimmed mean, but the factor-based model is continuing to rise. And our view at IceCap is what Keith said, which is we think inflation is going to rise because of raw materials prices, basic resource prices, as well as the continuing decline of the Canadian dollar, which is going to. So I think this is going to I think is really, really. This to me is one of the more interesting little data points we've seen in a long time.
And what's interesting is, and we've talked about this, and I agree with you, and my only kickback is that the only reason why inflation might not move higher is because of shelter inflation.
Yeah. You're right about
which
that.
is to say that I'm still seeing on the ground to start 2026 weak home sales. So far in Vancouver and in the GTA, they're tracking well below January of last year. And we're still seeing real weakness in the rental market. 15 straight months of monthly rental declines on a national basis. I don't know if you saw this, but it just came out today, actually. So Altus Group, which is a they basically track developer pre-sales, right? And we've talked about that number of how weak the pre-construction market is, particularly in the GTA. It's 30-year lows. Vancouver's been really, really weak. Basically, nobody's buying new housing, and so developers are effectively going bankrupt and basically closing the doors. And so there was a data point that came out today showing that for the entirety of 2025, new home sales in the GTA were the lowest ever recorded. They've been tracking data for 45 years, and you had the fewest annual new home sales in the GTA.
That's kind of cool / wild. No, I mean,
It's insane, right? I mean, 45 years. Think how much the population's grown over the last 45 years. And so
I have a Loonie Hour math question for you guys.
Yeah.
2026 minus 45 is what year?
2025 minus 45.
Yeah, we're about in the early 80s, right? That's what we're back to. That's when rates started going down lower. So back then, mortgage rates were 16, 18% in that range. And they kept going lower all the time. And then they were suppressed, during that lost decade. Now they're going higher again. That's why that's one of the contributing factors to having this weak real estate market. But Steve, you're absolutely right, though, about the contribution to shelter going into the official inflation data. But Rich's point, I think, will hit lower households, families. Yeah. That's what they're more concerned. Because if you're paying rent, you already have your rent set, and I doubt rent is going to go lower unless your lease is up and then you move. And I don't know.
Which I'm starting to see now. I had a client this past week where the tenant was below market for the last 4 or 5 years. They just left, and he's like, "Oh crap, rent's actually lower now than it was 4 or 5 years ago."
Sorry.
Yeah, I mean that's less of a nuance, but Rich, to your point, is like I could see a scenario where home prices continue to decline, rents drift lower, but yet your cost of living, which is like your food prices and your other day-to-day necessities, continue to sort of move higher.
So you outlined like really one of the big risks to our view, or my view, I should say, that so if we do have weak population growth and productivity is still shit, and we do have bad GDP growth, and you just have weak aggregate demand, and no matter how big and beautiful Canada's budget deficit is, it's insufficient to prop up aggregate demand. Then you can't. I think you're right. I'm missing on shelter. So shelter is 38% of the core CPI basket. And it's now at 2.1%. So that's the lowest it's been since 2021. And it's now its contribution to overall is 0. Yeah.
Okay.
So and you can see, even though we always harp on the stupid rent CPI thing, and we know it's wrong because it's right now it's at 4.8% year on year, and that's obviously stupid and wrong. But the shelter component is dominated by owner accommodation. And that's your favorite, Steve, which is the mortgage interest component. And we're seeing that crash out. And so even though shelter is continuing to really go down and down and down, services inflation, I can tell you, I'm looking at it right now, is starting to creep back up at 3.29, so 3.3%. So to me, that's where it's really, I think that's where that's where the fulcrum is. That's where you got to keep watching. If shelter keeps falling and services inflation keeps rising, we know we're in trouble, I think, personally.
So I think the Bank of Canada got pretty lucky this week because the inflation data it's an amazing number that came out, from an analytical perspective, but it got sandwiched between, China and the WEF. So it's not getting it's not getting any attention because the media aren't talking about this stuff, which is probably more important to really. But again, like one of our themes, like in our portfolios, we have a significant allocation to food agriculture. The price of food is going to continue to go higher in our mind, and this data continues to show it. And same with energy prices. So right now it seems like so WTI, so we're WTI down to the US is probably around bottom 54, 55, that range to the West Texas number. And now it's starting to go higher. So if we start to see commodity prices in general, base metals have already ripped higher. mean, again, inflation is going to go through the roof again, and it's going to be very difficult for any policymaker in Canada to try to bring it down. So instead, you can participate in it. Now we're back to that China story again. Just partner with the guys who are investing in this sector.
Yeah. I just think like we don't talk enough about the Canadian dollar and how much it's gone down. And there was a data print today. I dare not look at it, or if not, my computer is going to explode. But I think that the U.S. Consumer actually did really well, suggesting that the third quarter of so like the third and fourth quarters of U.S. Consumption growth was better than sort of expected, despite the fact that they don't have that much labor market growth or employment growth, excuse me. And so that to me just puts more pressure on the loonie, more pressure on the bond yields going up. And you cannot devalue your way to prosperity, and it's just a really sort of an interesting little time, I think, personally. But I forgot about the vibe sessions. That was the moral of the story. Oh my god!
What else you been?
Was that? Remember? Wait, basically. Anyway,
Keith, what else have you been looking
Steve?
at from like a markets perspective? I mean, obviously the move in precious metals has been, still going.
And base metals.
Base metals. I mean, the Japanese bond market had a bit of a wig out the other day. It seems to have recovered a little bit the day that we're recording here today. I know Treasury Secretary Scott Bessent was coming out and telling the Japanese that you got to get their bond market sorted out. And yeah, there's just so much going on. I don't know if there's any sort of other big pieces that really caught your attention this week.
Well, I think you hit all of them, Steve. I mean, so the theme of last year with financial markets is that we had risk for about 2-3 weeks last April, I think it was maybe. And then there was no risk. Every single volatility measure just went flatline. And it doesn't mean that the risk went away or melted. It's just got shifted into this year. So if you look at volatility across different markets already, we're in the third week in January, we're already having this, yo-yo effect. But under sort of overlaid over all of this, gold continues to grind higher all the time. And that's what should be capturing everyone's attention, that there's still some really weird things happening underneath. Is it a financial accident? Is it geopolitical? As we speak, the Americans have been, reshifting or moving their military, their fleets and equipment in the Middle East. I mean, they're getting ready to potentially confront Iran again. And if you think $55 oil was a bit uncomfortable, it's going to rip higher if that gets going again. But so two other events have taken place, Steve. One that you mentioned was Japan, and the other one was the private credit story that we continue to see. So very quickly with the private credit story, article came out in the Financial Times yesterday. And the headline, it's a headline. So private credit investors pull $7 billion from Wall Street's biggest funds. That was towards the end of 25. So again, we look at different trends and themes. Is the private credit trend getting better? Is it continuing or getting worse? And the response to that is it continues to, grind tighter and tighter. So that should capture your attention on the credit side. And then you put on top of that, the event in Japan, like again, if we didn't have the China deal with Canada, the World Economic Forum, the Japanese yield curve story, that would be the number one story for the week. I know Rich is smiling there as well, because it's just amazing what's happening.
I want to say something.
Say it.
The Japanese restarted the largest nuclear power plant in the world called TEPCO, which is amazing because I love nuclear power. Anyways, sorry, I just thought that was the most important.
And as soon as they started it, the long end of the yield curve just shot higher.
Might be a correlation here.
Maybe that's why Germany shut them down. They want to flatten their yield curve. But this show has no investment advice, by the way, after that. But with Japan, real quickly, we've talked about this, a lot already. But the Bank of Japan, I think they own maybe 55% of all government bonds that have been issued. They own a significant percentage of equity ETFs that are trading. I think that's like 85% or something in that range. So, I mean, the entire
ridiculous.
financial system is basically based on, if you want to use the word printed money, that's where they're going. But all of a sudden now, the 10-year rate and 30-year rate in Japan, very quickly, boom, it went higher again. And so the big concern with that, they talk about, hey, that's going to trigger the end of the carry trade, which is, the mother of all crisis will develop. I don't think that's going to happen. So instead, the Bank of Japan, they need to make a decision, and they've already made it. Do they rescue the bond market by printing money and flattening the yield curve, or yield curve control? You'll see YCC maybe in some articles. They have to do that. If they do that, it means the currency continues to decline. Now, I suspect the yen can decline 50% over the next 18 months. But
Keith,
you
can
want
you remind us how much the
gradual
yen...
decline? You want a gradual decline. It's not going to matter if that happens.
Can you
But just for
remind us? Can you remind us the
well,
yen, how much that's fallen against the US dollar over the last 5-10 years?
oh my God, Steve.
Oh, man.
Rich, pull up the chart.
50%.
It's
50%, I
it's-
think,
yeah,
right?
No, I
it is
don't
over
want to touch my
50%.
computer.
Yeah. But for people to understand why, you may not think like, hey, what's going on here? Just appreciate that regulatory capital for banks as well as insurance companies, it has to be in sovereign debt of that country. So in Canada, for example, pick your favorite bank. If you walked in and looked at their balance sheet, the regulatory capital would be federal government bonds from Canada. In Japan, the regulatory capital is, Japanese government bonds, JGBs. Insurance companies are the same thing, but the Japanese pension funds, I mean, they're stuffed with JGBs. I mean, that's what they have there. So with the Bank of Japan, do they want the Japanese government bond market to collapse and have these big write-offs? No, they can't. Like, if they do that, Japan just completely implodes. And then their nuclear power plant won't have any, they're making power that won't be used by anyone, Rich.
How
So that's
dare
not
you?
gonna work. So by default, then they have to bail out the bond market. Like it's not even a hard conversation, but by doing that, it then depreciates the currency significantly.
Well, Keith,
So,
you've been talking about... Go ahead, Rich.
Oh, sorry. Because you had mentioned if there was any market trends that we'd noticed, and I think there's two really, really, really interesting ones. So everybody last year was obsessed with AI stocks, and certainly, the Mag 7, the Magnificent Seven. And I just thought it was really interesting that's theories in my chart book has rolled over and is like flashing red big time, which I thought was really, really interesting. So last year's big winner has disappointed this year for sure. In that vein is software as a service. Again, I'm not going to name the tickers, but those stocks are also starting to not do so hot, which I also think is really interesting. We talk about market rotations. And we've talked about market concentration. We've talked about obviously crazy equity market valuations. And so to me, watching sort of those two sectors sort of change direction, let's say, to be polite, is really, really, I think, really, really interesting. And the other thing I wanted to mention is a couple weeks ago, Nicolas Maduro was extracted from Venezuela, and the Canadian
Is
oil
extracted
and gas,
the word? I thought they said hostage taking or incident. We don't know
he was
what to
taken
call it
hostage
still.
by the U.S. Southern District of New York, and the Canadian stocks, which had been really outperforming both the oil price and other oil and gas sectors globally, fell. And what I thought was really interesting, as within a week, the market assessed the risk and was like, not a big deal. And incidentally, all those stocks are now back up to near all-time highs again. Or sorry, not all-time highs, but you know what I mean, like the recent highs, which I thought was really cool, how the market sort of absorbed the information and was like, Venezuelan oil is not a threat. Thank you. And then away you went.
Okay, a couple more things here before we get closer to wrapping up. But this is kind of almost attached to our earlier conversation around what's happening geopolitically, the United States, and obviously being an aggressor to some extent. And one of the areas that they've been after, of course, is Iceland. Or sorry, not Iceland, Greenland. And so they're
not the same, Steve. They're actually two different places.
Iceland, Greenland. Denmark's selling its treasuries. Nothing new. The value of U.S. treasuries held by Denmark is down $9 billion, the lowest to $9 billion. It's the lowest in 14 years. Over the last year, the country has decreased its holdings by about 30%. They basically, was it, Keith, was it a Danish pension fund that said we're divesting all of our U.S. treasuries? I think it was like $100 million.
Yeah.
Which is obviously a rounding error, but
I just want to walk through the mechanics of that. People think, they're
please.
selling their treasuries. Say, okay, so I'm the Danish pension fund, and I don't have a Danish accent, so I can't even make it sound cool.
What is a Danish accent?
What do you? You must have one of those, Rich. You're good with the different accents. What would it be?
I don't know.
Okay,
I'm gonna get in trouble. Never mind.
Okay, we won't do that. But I'm going to sell them. I just sold them. Someone bought them. Rich, you bought them.
I'll buy it. I bought them.
Okay, you bought them. You gave me US dollars.
Yeah.
Okay.
Yeah.
You had to get US dollars to give me.
Yeah.
To buy it. Where'd you get them from?
My treasury account.
What were they in to start with?
Oh, they were in US dollars.
Well, you know, you're a big guy. You don't have like $100 million in cash lying around. My point is that if I sell treasuries, you know, that's the headline news. I'm selling treasury. That's bad for the U.S. Someone else is buying those treasuries. Like, they're not written off. It's not gone.
Yeah.
Someone else said, hey, I'm willing to take them. And here's the U.S. dollars. Now, Denmark, all of a sudden, this pension fund, they're sitting on $100 million US dollar cash. Now, what are they going to do?
Will they either invest it or give it to? Yeah.
Well, they'll buy U.S. equities or U.S. something in a U.S. dollar, maybe commodities, gold. I mean, who knows? Or they sell the U.S. dollars and they want to buy something in euro currency, as an example. Yeah. And that's a whole nother, beast. And they have to. How many in the eurozone now? How many countries?
19.
19. Okay, now you got to decide which of the 19 eurozone countries' debt that you want to buy. Meanwhile, the $100 million US dollars I just sold in the FX market, Steve just bought them because he wants dollars. And that's my point. When you see these stories of someone is divesting of this asset, they're only telling you half the story of the trade because someone else is buying it. It's just the way it works. Like, there's no, it is literally a zero-sum game that's involved with it.
Yeah. I mean, they said it wasn't in retaliation for the Greenland stuff, but
I would love to see the equity allocation of that Danish pension fund, because I bet you that they're up to their gills in S&P 500 stocks.
They could be. They could be. But Steve, continue with your risk assessment for Iceland right now.
Greenland. Well, so obviously, I mean, I don't love, again, the way he's threatened, the European Union on, hey, we're going to tariff you guys all unless you effectively sell us Greenland was kind of insane. But
it is insane.
There is initial details now that a Trump Greenland deal has emerged or is emerging. So it apparently involves, because Trump obviously came out and said, okay, just joking, I'm actually not going to tariff you guys anymore. It's like, let's figure this out, which is kind of classic Trump. Involves small pockets of land for the U.S. U.S. is going to be involved in Greenland's mineral rights. The duration of the deal apparently has, quote, an indefinite time frame designed to block Russian influence in Greenland. And the U.S. Golden Dome system will be involved. And opens the door to U.S.-backed infrastructure investment. So Trump is ultimately looking to secure land, minerals, and defense all in one deal. So this is sort of the latest details that are being leaked. I mean, obviously nothing official yet, but I don't know.
I mean, so first of all, I'm completely shocked how people have such a reaction to Trump's initial outrageous demand. Yeah, whatever you put, we're gonna have a conversation, negotiate. This is my first volley, what I'm coming out with. And we're now 10 years into this, and people, they still act like it's the first time.
Yeah, you can't be surprised.
It's still unacceptable, Keith.
Yeah, it'd be great if you could negotiate in good faith.
Keith, it's gross. It's gross.
I'm just, what I'm saying, Rich, is that this is the way it's going to happen again.
Yeah.
And everyone's going to get in a tizzy again. And what was the end result that Steve just gave us for Iceland? I know it's
Greenland?
Greenland, by the way. I'm
Yeah,
just joking.
yeah.
You know, they agreed to something. You know, it
They
got
will, yeah.
done. So it doesn't mean you have to like or dislike the way someone negotiates, because it is happening. I
it's
mean,
just
we were
nuts,
not
that's
in
all.
China. We weren't in Beijing. You know, we have no idea what that negotiation was like. I have a feeling it was a lot more one-sided than people think. You know, it may not have been. But again,
It
this is the world we're.
may have involved a loan with a certain company. That's
Well,
Let's just say this: his negotiating style doesn't necessarily win friends and influence people.
That's true.
Correct.
Anyway,
Correct. And but it's done though. Do we want to move on to the WEF at all, or do we want to just finish up with
well, I just have one little quick
the
thing on the
blob?
web.
I have one observation about the blob.
Go
That's
for
the
it.
WEF, by the way. I'll call it the blob. Cited people who've been have been seen attending WEF. They went from Katy Perry. Why is Katy Perry? That
She's
gets front
dating
page
Justin
news.
Trudeau. She's dating Justin Trudeau.
I know, it's just beyond me, right? The stuff still gets, attention. We have Canadian CPI data out, guys. That should be, headline news. My favorite one was Al Gore yelling at Scott Bessent. Did you see that? No, not at Bessent, at Lutnick. At Lutnick,
Yeah.
by the way.
Oh, I didn't see that. No.
Yeah, apparently, an Al Gore who had a few too many glasses of Chardonnay.
No, is that a real story?
Apparently, was that Christine Lagarde apparently walked out of dinner because Lutnick was spewing something about energy or something, and she stormed off.
But what is interesting, Larry Fink, by the way, Larry Fink, he's the CEO and then the founder of BlackRock. So like the biggest financial blob on the planet. And he actually admitted that the amount of power needed for data centers, it cannot be derived from intermittent solar and wind.
Oh, you stole my thing.
So they need steady baseload power because they can't turn it on and off. So that's a significant event. Then you have Japan, of course, turning the power plant back on again. But the other thing that came out that was a change in wording, and you may not appreciate the significance of this. And by the way, the WEF thing is now changed. The culture has changed. It used to be dominated by one blob, and I think now it's sort of changed a little bit. But they've actually changed the wording from stakeholders back to shareholders.
Interesting.
Yeah, it really is interesting because so shareholders, the people who have an invested interest in a company, basically that's what you're looking at. And maybe about a decade ago, the WEF, they changed shareholders to stakeholders, meaning that every global decision, which is, the global elite, globalization, the global agenda, all that, the one world government that you're not allowed to say, of course. But it was changed so that decisions should be made so that it benefits a stakeholder in anything. The stakeholder could be someone who's living there, they have no money, but they need to benefit. You can see where they went with it. That's now changing it. It's now back to shareholder. And again, this is not getting a lot of attention or focus. So again, we are entering a different way of running the world's economy. And my suggestion is don't like it or dislike it. Instead, accept it. Look through all this noise of all this stuff that you're hearing and reading. And if you do that, it's kind of easy to see where it's going. Did you see what I mean? And this is what people should be embracing. Instead of having this confusing period where everyone is arguing with each other, you're getting canceled for saying one thing over another. It's actually happening in front of us. I mean, so Rich, like your whole focus on the energy side, that's changed. The pendulum is now swinging back in the other direction. So this is what people should be excited about, is that we have now better visibility coming up for the world's economy.
Can I just add on the energy thing? Which is, again, we talked about the Overton window, which I had to look up feverishly before the show a couple of weeks ago. But Honeywell is an enormous U.S. company. It's run by an Indian guy who is an engineer by background. And he said, they were talking about, Honeywell's CEO says solar power cannot produce cement or steel. Quote, they're very energy intensive. it's physics. Renewables remain in the mix, but they cannot bring the amount of joules, terajoules, basically, physical representations of energy. We need to produce this infrastructure required in the world. To me, that was like, it's done. We have now officially changed a direction. And I think when you have someone as sophisticated and as accomplished and obviously as visible as the guy from Honeywell saying that in an interview, really with very little pushback from people, I think it's very important.
Rich.
The other thing is that now I'm a big fan of Chancellor Merz. Somebody, again, with this changing world dynamic, and Mr. Merz, who's the Chancellor of Germany, came out and he said, sorry, I'm losing it here. He said, Germany and Europe have wasted incredible potential for growth in recent years by dragging their feet on reforms and unnecessary and excessive curtailing of entrepreneurial freedom and personal responsibility. We must substantially reduce bureaucracy in Europe. And then he goes on and on and on to say, we've become the world champion of overregulation, and that needs to end. And again, to me, the subtext there is productivity, investment, and obviously energy.
That's why Christine Lagarde left the dinner. She's a champion of bureaucracy, more red tape.
Out of control.
While we're on it, just to wrap it up, during this whole Chinese-Canada trade deal announcement, so it was Energy Minister Tim Hodgson came out and he said that China shares the same goal for net zero as we do, which I found kind of rather interesting. Actually, there was an article.
God, what a spectacular lie that is.
Yeah, it was pretty impressive. And he's a smart guy, so I know that he
is a smart guy. What do you think?
Whatever. It is what it is. But ironically, there was an article written this week by a friend of the show, Doomberg, showing that China's coal appetite is so ferocious that it alone burns 56% of total global coal output, 20 times the current combined consumption of the 27 member states of the EU. It
just tells you like they're so pissed off with Donald Trump that they have to lie about something so spectacularly untrue. You know what I mean? It's just so obvious.
Yeah.
Anyway.
It is what it is. This is why we have the show. And
can you read that stat one last time? Sorry.
I'll read the entire thing for you. So coal accounted for 58% of China's primary energy consumption in 2024. A distant second was oil at 20%, with natural gas rounding out the podium at 10%. Simple arithmetic dictates that nuclear, hydroelectric, solar, wind, and other renewables split the remaining 12%. China's coal appetite is so ferocious that it alone burns 56% of the global total, or 20 times the current combined consumption of the 27 member states of the European Union. Just since 2000, China has tripled the amount it burns, and that wedge of growth alone is some 8 times larger than total U.S. consumption in 2024.
And how are they producing energy to build these electric cars that they're going to ship to us?
Well, they're opening 6 to 7 new coal power plants per month.
And also nuclear. They're doing a lot of nuclear too.
Whatever.
It's crazy. They're not interested in climate change. I think it's fair to say.
Oh boy, stay tuned next week when we discuss.
Yeah, we'll be looking for your comments in the email inbox. As always, guys, we do appreciate the support. Certainly doing our best. Don't worry, I think we'll be fine as a country. We'll figure it out. But as always, we'll see you next week.